All right, let's dive right in. Today we're talking about crypto's two competing identities. I mean, is this thing a high-stakes investment for Wall Street, or is it a super simple payment tool for Main Street? Well, the surprising answer is it's trying to be both at the same time, and that creates this really fascinating tension right at the heart of the industry.
So what's crypto's real destiny here? Is it going to be digital gold, a multi-trillion-dollar asset that big-time global investors trade, or is its future something completely different? Digital cash, the super simple way you buy your morning coffee. I mean, these two paths, they really couldn't be more different.
Think of it like a two-sided coin, right? On one side, you've got crypto as this massive, huge bet on the future of finance, a hedge against what's happening with global economic policy. But then you flip it over, and on the other side, it's this super practical payment tool designed to help out small businesses on Main Street. To really get a handle on this, let's dive into that first identity, crypto as this absolute investment giant.
Okay, so first up, Bitcoin, the premier financial asset. Now, it's easy to get lost in all the hype, I get it, but just looking at the numbers from a single week of trading, wow, it tells such a powerful story about the momentum and the serious investor interest that's driving this side of crypto.
So let's take just 1 week of trading, for example. The week kicks off with Bitcoin's price sitting right around $109,000.
But get this, by the end of that same week, it had absolutely surged past $123,000. That's a 12% gain in just 7 days. Look, this isn't just some random market noise. No way. There is a really powerful philosophy driving this incredible growth.
So, what is that philosophy? Well, according to early believers like George Kickwad, Bitcoin was always designed to be a kind of insurance policy. It's a bet against governments just endlessly printing money and what a lot of people see as irresponsible spending. So, in this view, when things get shaky in the global economy, assets like Bitcoin, they become a safe place to park your money. And you know what's crazy? This journey to acceptance happens surprisingly fast. I mean, think about it. Back in 2014, Bitcoin was just $450. It was a niche hobby for tech nerds, right? But then, as global government debt started to soar, these legendary investors like Paul Tudor Jones, they started paying attention. And that was the big aha moment. It just opened the floodgates for giants like BlackRock and Fidelity to bring Bitcoin straight into mainstream finance.
The conviction these early adopters have is just staggering. Seriously. For them, today's prices are just milestones. They're looking at a path towards $1 million, maybe even $10 million per coin. But there's another story happening here. Behind this soaring asset price, the actual technology that powers Bitcoin, it's going through a massive pivot of its own.
So let's pull back the curtain on the price for a minute and look at the engine of Bitcoin mining, because that engine is going through a huge and, frankly, pretty unexpected transformation.
All right, first things first, a quick refresher on what Bitcoin mining actually is. Basically, it's a process where these super powerful computers solve really complex math problems. By doing that, they secure the whole network. And as a reward for their work, they get new Bitcoins. Now, you gotta understand, this is an incredibly energy-hungry and expensive business to be in.
Mining has really gone through a few different phases. It started out as just a hobby for enthusiasts, people tinkering in their basements. Then it got serious. It industrialized, needing massive data centers. And now we're seeing a major strategic pivot. The very same stuff, the data centers, the big energy contracts, is being repurposed for the absolutely booming field of AI.
So you might be asking, why pivot to AI? Well, it boils down to 3 key things. First, there's this massive global race to build artificial general intelligence, AGI, and that requires a staggering amount of computing power. Second, you have the tech giants, Google, Amazon, the hyperscalers. They are desperate for energy to fuel their own AI ambitions. And third, for the miners themselves, it's just a smart business move. It lets them diversify their revenue, especially since the rewards for mining Bitcoin are designed to go down over time.
Okay, now let's completely flip that coin over. We've seen crypto as this huge macro investment, but what about how it's being used on Main Street? This is where stablecoins come into play. So what's a stablecoin? It's basically a type of crypto designed to have a stable value. It's usually pegged to a real-world currency, like the US dollar. And believe it or not, they're being used to solve a very real, very annoying, everyday problem for small businesses.
And man, this quote from Wade Preston, a coffee shop owner, it just says it all.
For so many small businesses, the fees they're forced to pay to credit card companies and banks, they're one of their biggest expenses. Sometimes those fees literally cost more than their highest paid human employee. Think about that.
And you can see the pain right here on this chart. I mean, imagine you're a small business and your profit margin is maybe 5 to 10%. A 3 or 4% transaction fee isn't just a little annoyance. It can literally wipe out almost half your earnings on every single sale. That's brutal.
And look, this is not a small problem, not at all. In 2024 alone, merchants paid a record-breaking $187 billion in these fees. That is a massive industry built on middlemen, which is exactly the kind of thing new technology loves to disrupt.
So, why does it cost so much? Well, think about what happens when you swipe your card. That payment has to go on this long, complicated journey through a chain of middlemen. You've got the store's bank, the payment network like Visa, your bank, and yep, each one takes a little piece of the pie before the merchant ever sees a dime.
Now, compare all that to a payment with a stablecoin. A customer sends the funds directly from their digital wallet to the merchant's digital wallet. That's it. The end. It's faster, it's cheaper, and it cuts out all those expensive middlemen. This is the promise of crypto as digital cash.
So here we are. We've got these two radically different paths for crypto. On one hand, it's a high-stakes global financial game. On the other, it's a super practical local tool. Which brings us to the really big question. Where does the future of crypto actually lie?
This table really lays it all out, summarizing crypto's two faces perfectly. You have Bitcoin positioned as digital gold, a big-picture macroeconomic store of value for long-term investors. And then you have stablecoins, which are all about being digital cash, a tool for everyday people and merchants, focused on making things efficient and cheap right there on Main Street.
And that leaves us with one last big question. Is the future of crypto going to be written on Wall Street as this new class of global asset, or will its true legacy actually be built on Main Street by completely changing how we all pay for things every single day? Maybe the answer is both, but the battle for which one of these identities will ultimately define crypto, that's happening right now. Thanks for joining me.